Monday, September 15th, 2025, Maneco 64, home of alternative economics and contrarian views. Before I start today, I'd like to thank all of you out there for following my channel, for subscribing, for participating in the community, as it were. That was a comment made by one of the longtime followers that this is supposed to be a community, the channel. And I'd like to thank all of you because we've reached 150,000 subscribers. That's pretty massive. I started out posting videos in late 2015, of course, with 0 subscribers. The point of my videos is not to rack up as many subscribers as possible, but to provide good content. But it is a good indicator of the job that I'm doing, and I thank you for your support. And if you like my videos and you watch them regularly and haven't subscribed yet, make sure you do. The other thing I wanted to say, there's a lot of new channels out there, and I think they're run by AI and bots, and they impersonate not only me, but a lot of other people in our space, in the precious metals, sound money, free market space. And I've contacted Google and YouTube about it, but you will see a lot of thumbnails with my face on it. Be careful when you click on those, because they're basically stealing my content and other creators' contents. Anyway, back to business. Today we're going to talk about the dollar and the yuan. I've been warning since 2017 that the petrodollar was going to decrease in importance. I have a petrodollar files in my playlist. I have a playlist called the petrodollar files. And I said at the time that it was going to take time, and the major reason for that, of course, was the growth of the global south, the growth of China, Russia, and other countries, and the fact that these countries, the non-G7 countries, were trying to basically become less dependent on the dollar system, not because they want to destroy the dollar, but because they want to be more self-reliant. They don't want to depend on the dollar alone. And one of the reasons for that, of course, has been the regime of sanctions and other political punishments by the US in the last 15 years. And it's akin to you having a bank account with a particular bank, and this bank starts making it hard for you to deal with them. Well, you're going to look for another bank. And I think the global south, or the BRICS, if you want to call it, really, they're not really looking for another bank. They're not really looking for another reserve currency. They're looking for another system that they can deal amongst themselves, that they don't have to go through the US dollar, a third-party currency. And yes, back in 2017-18, when I started talking about this, it wasn't even on the radar screen, but now it's becoming more and more important. And what I want to talk about today is something about the bond market, which is a market that, of course, I worked in for over 20 years. It wasn't the corporate bond market, but it was the government bond market. But it's a very important market. The bond markets are the biggest markets out there. They're bigger than the stock market or the equity market. And I remember Jim Rickards actually talking about reserve currencies and whether the yuan or the Chinese renminbi would become a major reserve currency. I don't remember exactly how many years ago, maybe at least 5, maybe 7, 10 years ago, he said, yeah, China is never, well, not never, but he said it would take decades for them to really be a major, have a major part in the world's monetary architecture, trade architecture, because they don't have a bond market like in the US, a deep bond market, but that's also changing very quickly. China seems to do everything very quickly and very well. And I'm not like defending China or its political system. I'm just looking at the facts. And that's what a lot of people have a problem doing. They get too bogged down into politics and things like that, instead of looking at the numbers and the facts, of course. So I'm seeing a lot of stuff about China. For example, Vince Lancy posted this yesterday. Yuan bond growth. Countries are beginning to issue debt in yuan. Hungary's 5 billion yuan panda bond in July was the largest sovereign deal of its kind, while Russian energy firms are preparing yuan-denominated paper. So 5 billion yuan is under $1 billion. That's pretty small. But we're also seeing that other countries, and I think I spoke about this a couple of weeks ago or so, like developing countries, are swapping out of dollar debt to cut borrowing costs. And they're resorting to issuing Chinese yuan or renminbi bonds, or sometimes even Swiss francs, because they cost less. So there's the FT reporting it. That was from September 2nd. And I received something from one of the viewers about an Australian company called Fortescue. Fortescue Mining. What do they do? Well, they're the 4th largest iron ore producer in the world. They're the 3rd biggest Australian iron ore producer. And the biggest ones are BHP and Rio Tinto. But according to the research I've done, Fortescue is a major producer, and it's been growing quite a bit over the recent years. The biggest iron ore producer in the world is Vale, which is a Brazilian mining giant. But anyway, what's that got to do with de-dollarization and the growth of the yuan, overseas yuan bond market? And that has been one of the linchpins, an overseas bond market for demand for the dollar. In London and in Europe, we've had what's called the Eurobond market, where dollars abroad are issued or lent to corporations. And that's what the Eurobond market is all about. Dollars that are parked abroad. And there's a Eurobond market also for other currencies. Most people think there's only the euro dollar, but that's not true. But anyway, I have to thank the viewer for sending me this. I wouldn't have known about this. About a week ago, August 8th, exactly a week ago, this came out. Australia's Fortescue secures yuan loan worth $2 billion. That's US dollars, which is about 15 billion yuan. So it's quite a bit more than what Hungary issued. And it says 4 green energy plans, and you might have whatever opinion on this green energy and climate change, but be as it may, this is happening. So let's quickly go through this Reuters article. It's not long. And the other thing we're going to do after that is look at which bond markets are the biggest in the world and how China ranks in terms ranks with the US in terms of how big the bond markets are. But anyway, it says here, Australia's Fortescue said on Friday it had secured a yuan denominated loan worth 14.2 billion Chinese yuan, $1.98 billion, to ramp up its decarbonization plans. I know I have an opinion about that, but I'm just trying to look at de-dollarization and the rise of the yuan, right? But anyway, weeks after scrapping its US and Australian green hydrogen projects. The loan agreement comes as the world's fourth largest iron ore miner reshapes its clean energy portfolio as the United States scales back its priorities on green energy under the Trump administration. Fortescue announced plans in July to wind up its green hydrogen projects in Arizona and Queensland in Australia, a week after its billionaire founder and chairman Andrew Forrest visited China with Australian Prime Minister Anthony Albanese. So very important company, Fortescue, in the scheme of things. On Friday, Forrest, popularly known as Twiggy, lauded China's industrial scale innovation and commitment to investing in green technology, while underscoring his deepening ties with Chinese institutions. As the United States steps back from investing in what will be the world's greatest industry, China and Fortescue are advancing the green technology needed to lead the global green industrial revolution, Forrest said in a statement. This financing agreement strengthens Fortescue's long-standing partnerships with Chinese institutions and opens new frontiers for collaboration, Forrest said. The 5-year syndicated term loan facility with a 3.8% per annum fixed interest rates is backed by leading Chinese, Australian, and international lenders, including Bank of China and ICBC. The facility is the first of its kind for an Australian company, yet first of its kind, where the use of proceeds is not restricted, a Fortescue spokesperson told Reuters in an emailed response. Fortescue plans to use the facility for general corporate purposes and its decarbonization plans, the company said. So there you go. Australia, its biggest trading partner, of course, is China. There are some people who think Australia might join BRICS. What do I think about that? I think Australia is going to play a balanced strategy. They're going to keep one foot in the G7 and the United States, because I think they're still very important allies, but they're also going to be very collaborative and involved with BRICS, especially China. And China, of course, is a big part of BRICS. So yeah, I don't think Australia is giving up the dollar per se, but the fact that this company is has tapped the yuan bond market is very significant in my opinion. And this is I think this is gonna snowball. As I said, China does things very quickly and very well. I remember, for example, back in the early 90s, when China was starting to pick up, I opened an account with my broker to trade in the Shenzhen stock exchange, the B shares there. It was just a small market back then. And I looked at a company called China Bicycles, and I bought that thinking, well, China's going to grow, they're going to need bicycles. But the Chinese, they have the best electric cars now, vehicles out there. So the same thing with the bond market, Mr. Rickards. I think China is going to shock the world, and the Chinese bond market is going to grow, and it's going to become the biggest as well. And I'm going to be speaking to Eric Young from Hong Kong. Not about this exactly, but about how gold is going to fit in with all of this. So I'm not going to touch upon it now. What I want to look at now is the biggest bond markets in the world and why China is really catching up with the United States. So I went to ChatGPT and I asked, what are the biggest bond markets in the world? And it says, just as I told you earlier, and this I knew, I didn't have to ask ChatGPT, it says the world's bond markets are massive, collectively far larger than global stock markets. The biggest ones are concentrated in advanced economies with deep financial systems. As of the latest available data, 2023-2024, the largest bond markets by outstanding debt securities are the United States, 50 trillion in outstanding debt securities. U.S. Treasury market alone is the most liquid and important benchmark globally for now, but corporate, municipal, and mortgage-backed securities are also make it enormous. Number two, yes, it's China, the second largest bond market, around 20 trillion plus dollars, driven by government bonds, central and local, policy bank bonds, and a growing corporate bond segment. Number three, lagging way behind, is Japan, 12 to 13 trillion. Euro area is around 20 trillion. But that's different countries, right? UK is 4 to 5 trillion. And I also looked at how the growth of the Chinese panda market, they call it the panda bonds. I guess it's foreign companies borrowing in yuan. That's been growing quite significantly since 2023, 2024. So it's really catching on. It says here, compared to 10 years ago, i.e. 2015, the market was much smaller. Precise data for 2015 may be less readily available in current sources, but the massive issuance in 2023, 2024, and the 1 trillion renminbi cumulative suggest a steep ramp up. So there you go. That's the panda bonds, panda bond market. So all that's going to mean is that there's going to be less demand for dollars because, yeah, when you borrow in dollars, yeah, you want the dollars, right? So there's more demand for the currency. But if that's changing, and I'm not saying it's going to happen overnight, all these things kind of take a little while. As I said, I started talking about the demise, let's say, of the petrodollar back in 2017, and here we are 8 years later, and it's almost like complete, and it's accelerating, and the same thing's going to happen for the bond markets, and I think it could be a lot quicker than 8 years. We could see in the next year or two the Chinese bond market overtaking the US bond market, and that, in my opinion, will mean that the dollar is going to continue to lose its status as the major reserve currency, even major reserve, a major form of international payment. And of course, I think China is making their renminbi kind of linked to gold a lot, and I'm going to talk about that, of course, with Eric Young. So look out for my interview with him about that. So yeah, let's quickly look at where the markets are this morning. It's 7:30 a.m. London time, so I'm quite early. Spot gold is pretty steady. It's basically unchanged here at 36.43. The low has been 36.26. The high 36.47. Silver is also unchanged, trading at 42.20. High's been 34, and the low has been just below 42. So very quiet markets so far. I expect they will get busier later on. I notice the U.S. Treasury yields, they're creeping up a little bit. The 30-year yield is back to 470. It's up 2 basis points. The 10-year as well is up 2 basis points at 408. Yes, it has come off a bit in the last week or two. And of course, the whole focus this week will be the Fed's decision on Wednesday. It's almost a done deal. They're going to cut by 25 on Wednesday. The news is coming out at 2 p.m. Eastern Time or 7 p.m. London. The other thing to watch from that meeting is what they're forecasting, their dot plot chart going forward, and also the press conference. See what is said there by the chairman of the Federal Reserve. So the currency market and stocks are fairly quiet so far. But anyway, with that, I'm going to wish you all a very good day. Take care. Bye.